Tesla stock, Tesla stock, Tesla stock. For the next 48 hours, you're going to hear nothing but Tesla stock chatter out there, folks, okay? It is about to be earnings time. And here today on Fast Money, they had Gene Munster, the Tesla bull, on against a few, let's call it very bearish Tesla individuals like Dan Nathan, like Danny Moses from The Big Short. Very, very bearish folks around Tesla. And so I'm looking forward to reacting to this one, getting into this one with you guys here today. It was actually a really good Fast Money today. Several interesting things happened in that episode, and this was just one of those. So appreciate everybody joining me as always. Now, in regards to me personally, I am carrying this many Tesla shares into earnings. I'm carrying 1,665 shares into these earnings here. As far as what happens if Tesla stock moves down a bunch or up a bunch, am I going to sell Tesla stock? No, no, quite simply, no. Okay. Long-term hold. Now, in terms of expectations here, I don't know if you guys know expectations. Tesla, as far as what analysts are expecting, they're expecting Tesla to report 82 cents of EPS on the EPS side for this current quarter, and they're expecting about 46% growth in revenues, expected to do about $24.7 billion of revenue. Margins are going to be very, very important. What do they report there? I've seen some folks have estimates of like 16% on the bearish side, 17%. Some folks are expecting more toward the 18%, 19% side. So we'll see what happens with margins. But I can tell you the thing that's going to be just as important as the numbers is the commentary. What does the CFO have to say? If Musk is on the call, which I assume he'll be, we'll see. What does he have to say? What about demand moving forward and those sorts of things? So yeah, what about Cybertruck? Like, when are we going to ramp this thing? What are we talking in terms of units for next quarter, the following quarter after that for 2024? So yeah, it's going to be a very exciting Tesla earnings. I appreciate everybody joining me as always. Thanks so much, folks. And it is, I forgot a drink, man. I forgot a drink. And if you don't know, listen, okay? I got something for you, okay? Hydrate before you dehydrate. Hydrate before you dehydrate. It is vicious out here in Vegas right now. This garage is sweltering. I had to put my computer in the freezer. Before I came out here, because otherwise it will literally overheat. That's how hot it gets. The Teslas consistently turn on and off because they got to keep themselves cool. Yeah, man. Okay, Jeremy's making it through, but sometimes these machines, they just aren't cut out for the heat. I appreciate everybody joining me as always. New all-time high subscribers. If you're looking to apply for my private group, check out the description area. Let's get into this.
Partner of Deepwater Asset Management. Gene, I have to warn you, we've got some bears specifically on Tesla on this desk tonight, so I hope you don't feel outnumbered by us bringing you into the fold here. But lay out, what are we expecting for the quarter, and how is Tesla going to justify where it's at right now stock-wise?
So there's the near term, which is tomorrow, and then there's the long term. And as far as the near term, I don't know if the stock is going to be up or down after they report their earnings. The key topic, obviously, for earnings is going to be auto gross margins ex credits. In the March quarter, the street was looking for 20%. They missed it. They hit 19%. The street's looking for 18% this quarter. I suspect it's going to be light, somewhere between 17 and 18%. I don't think that's going to be an issue for the stock ultimately, because I think the commentary from the CFO is going to be to expect improving gross margins throughout the back half of the year. And so I just kind of put that as the starting point. I think all systems go when it comes to improving margins, despite what probably is going to be a miss for June. The outlook is positive. But I would love for the conversation, the debate, to be focused on the long term, because I think that's what's more important, Melissa. And ultimately, I think the long term, if we're going to boil the question down, it's not about auto gross margins ex credits. The long-term question is this: can Tesla get to 10 or 20% market share of where eventually EVs will be 100%? And I will make the case that if their goal is for 20% share, if they do 10% share in a decade, so it's a long time, but 10% in a decade, that's a $1.1 trillion business. They are going to do $130 billion in revenue this year. If you're of the camp that traditional auto is going to catch up to Tesla, then I'd love to have a debate around that topic.
Hey, Gene, it's Dan. And again, I think you're a great long-term thinker. I'm not, especially. I've been a bad short-term thinker on this one of late. But it's interesting when you think about the short-term right here. Into last quarter, the stock had sold off 16%. They missed on gross margins. The stock sold off the next day 10%. It has since rallied since bottoming out post-earnings 100%. It's gained $450 billion in market capitalization since it was at 150 in the days after earnings. So when you think about the fact that they're likely to come in at 17% gross margin, who knows, whatever they say on the call, whether that's true or not, whether they're bottoming out or not, there is a price war going on right now. And so to me, in the history of tech, and you and I have talked about this a lot over the last 25 years, when you have declining margins like this in a market like this where there's just aggressive pricing, the more units they sell, it's worse for the margin here. So I'm just curious, how do you square the near term right now with your very positive long-term vision? Because the fundamentals don't seem to be improving quarter over quarter.
So I would square it up by saying I think margins are going to improve in the back half of the year. And if I'm wrong by a quarter, they're likely improve in 2024. And the reason is that they are ramping production at Austin, their 4680 battery, which has been a drag on margins. We've talked about lithium prices going down. That benefits Tesla more than it benefits Ford and Giga Berlin. And so that's my base case. Agree. The facts are the facts. Margins have been down, but I think that they will rally back here, back half of this year into next year. And as far as the margins and the impact, I think this is a critical topic, which is traditional auto is getting smoked right now when it comes to EVs. Ford, they break it out. They lose 40% in their EV division.
Before we go further here, let me see if I subscribe to a guy on Patreon, and he's kind of like a Tesla expert in my opinion. Let me see if he has numbers in terms of his projections in regards to this, because I actually haven't seen him. So let me pull that up for you guys, and we'll go from there. Alrighty, folks, this is pretty shocking, okay? Pretty darn shocking. So this is a guy I follow on Patreon. He is very, very dedicated to Tesla and everything that's going on, deliveries numbers and all the estimates and all those sorts of things. So what he has is he actually has Tesla, looks like missing analyst expectations by a little bit here. It looks like analysts are at about 82 cents. I don't know why he put 81 there, but I think analysts are at 82 cents. He's got 80 cents. And he actually has a really low estimate as far as gross margins go, excluding regulatory credit. So I think that's pretty intriguing that somebody that's seen as kind of, let's call it somebody that's kind of like a Tesla expert is predicting those sorts of numbers. So, that's, I would call it, based upon Troy Tesla-like's numbers here, that's pretty bearish, at least in the short term in regards to Tesla. Now, we do know Tesla can, as far as the stock price, can certainly look past that. That is something we do know, okay? By the way, if you don't subscribe to, his Patreon, you might want to. I think it's either $5 or $10 a month I pay for this, and I think it's just, if you own Tesla stock, might be one you want to subscribe to. And of course, you need to subscribe to my Patreon. What the heck are you doing if you're not part of that? You get to see the stocks I'm buying each week? What in the world? You better be part of that. That's in the description area down there. I'll put his pinned comment for you, so definitely make sure you're part of that as well.
As far as market share and being able to produce these many cars. But to Dan's point, it hasn't been a supply problem. It was a demand problem, at least nearer term, cutting price to do that. Until I see these things which have been promised for years, FSD at the right level, whatever level that would be, or all these other things that are supposed to be on the come, I still see it as an auto company. Maybe that's naive. And I'm still trying to figure out how we went from $110 per share here to kind of $280 to $290 on what has been happening. Yes, there's AI. It's always been a part of Tesla. AI has been. So I'm trying to figure out where were all the screaming bulls? Because it feels like they kind of went away when stock was drifting below 150. What is the reason the stock you think has rallied here from 105, let's say, to 290?
Yeah, that tends to happen. Bulls kind of get a little more quiet when things aren't going right, and they get a little more loud when things are going right. Bears do the same exact thing. When things are working their way, they're very, very loud and prominent and everywhere. And then when things are going bad, usually they kind of go into hibernation a little bit. That's why they're called a bear. But and also some folks that used to be bullish on Tesla stock gave up on the Tesla stock story and, made predictions that it was going $50 to $60 a share, obviously, right? And sold out of that stock, at $100-something a share. So you had a few different camps in regards to that.
I think it's an understanding that they are recapturing that sales dipped and they've rebounded. The June quarter deliveries up 83% year over year. The overall EV industry up 50%. I mean, they had a great June quarter, and I think that's part of the reason why you had the rebound here. But I want to see the Tesla bear bull debate is great. I love the topic. I think ultimately, let's just quickly base it on maybe an agreement or we'll share some.
I love what Gene Munster is about to do here. This is great what he's about to do.
Our electric car is going to be the future. And I would guess that most of the desk there would say electric cars will be the future. I'm okay if demand slips for a quarter or 2 or 4 quarters, because the end point is clear in my mind. Gas cars are going away. And ultimately, I think that what is most optimistic is the other players that are trying to grab this massive TAM. It's as big as it gets. The other players, I think, are going to struggle with profitability to get there. So that's why I'm okay. There's not like mental gymnastics around Optimus Prime or their solar roof or their lithium refinery that needs for me to get more to think that the stock's going higher. This is just very simple. The world's going to electric. Tesla has a competitive advantage around profitability. If you don't get profitable out of traditional auto, they got problems. And I think that's the opportunity.
Gene, thanks for playing. Gene Munster, Deepwater Asset Management. Is it possible that it's simply a process of elimination? Gas cars will be gone. Electric cars are the future. Who's going to win? Is it going to be GM? Is it going to be Ford? Look at Ford. They're cutting price because no demand. There's not a problem with demand. I mean, there is a problem with demand. There's not a problem with supply here.
There are a lot of other auto companies which are going to be producing EVs, which are coming onto the market right now. I go back to what drove the stock higher. I think about their charging stations, right? They're going to open those up to it's 50 cents maybe in 2032. I just think incrementally we're in a market right now, and Tesla's one of the magnificent 7, as we call it, that's getting the benefit of the doubt in all aspects. And I think it's kind of fed on itself. And I'm not short a lot here because, again, it's not trading on fundamentals, in my opinion. It's trading on the out years and the promises.
Last night we had Phil LeBeau on. We asked him the question about margins. It's that Wells Fargo note. And so the bull case is this will be the trough quarter for margins, or at least a quarter or 2 away. And that's when you buy the stock. And then the bear case is margins are going to continue to deteriorate. So you go from 17.5% to 16% margins, then it's a whole different paradigm, I think, for the stock. So if you're bullish, this is a trough margins. If you're bearish, it's get worse from here. And I'm not an expert in the stock, but I think given the run you have, it's very hard to make a continued bull case given the run.
In terms of margins, my expectations are if the economy stays decent, margins will improve from here on for the remainder of this year. If the economy was to deteriorate in any major way, margins would continue to be in a much weaker place.
There's clearly a demand problem. Gene just mentioned that EVs in the first half of this year were up 50% year over year. You know what they were up last year? 71% year over year. So that growth rate is actually declining. And when you think about,
Dan, Nathan, come on, man. You're smarter than this. That's what happens with growth rates over time. They decelerate. They're still ridiculous to be growing 50-something%, right? And there's going to be some day when EVs are growing 20% and 10%, but that's still going to be phenomenal because it's going to be on a much bigger base at that time. Come on, Dan, Nathan. This is basic math.
Ramping Giga Berlin. Well, I don't know about you guys, but Europe's in a bit of a recession. China is dealing with a deflationary environment right now. And Shanghai is a large part, I think, of the valuation off of the lows, that started in January when basically the Chinese did an about face on zero COVID. And I don't think China's much better. So to me, I don't get it here. And I've been on the other side of this. I had it right on margins into the Q1 print. And I think if you're new to the story, I think there's probably a good trade right here in and around 290 for the same reason. I think they print 17%. And whatever they say, I think you want to discount whatever they have to say about margins troughing in the back half of the year.
It's not to say that fundamentals will matter, but what is the right multiple to pay on a company that has declining margins, might be growing rapidly, but is incredibly capital intensive? Because at the end of the day, that's what this business is, capital intensive. So at 70 times earnings where it is today, the valuation has never really mattered. But at some point, once it hits that rate of maturity, growth rates decline, valuation will matter.
Coming up, Microsoft closing out on Apple.
But also that company might be exponentially bigger than it is today. And the revenues that company's pulling in, the net incomes that company's pulling in is going to dwarf what they're putting up now. Now, do you remember one of the many bull theses I had many years ago when I was, first adding my Tesla shares? This was probably 2018, 2019. And I know a lot of people weren't watching back then, but do you remember one of my bull theses around Tesla? It was around the competitors had to go through the dealership model. And that was going to create a lot of headaches for those companies long term. Guess what we're already hearing? Ford just did that price cut. A lot of dealers are pushing back against that price cut in how it will be worked in and all those sorts of things. This gets very complicated when you're dealing with the dealership model and then somebody trying to discount and how that gets played out and all those sorts of things. And so when I say the dealership model is going to be a nightmare because traditional auto goes through that dealership model, it's really starting to play out in a major, major way. Also, we do know dealerships are not very incentivized to sell EVs because we do know EVs generally have a lot less issues with them and problems than traditional ICE cars. They don't need oil changes and all this stuff, right? And so a lot of these, dealerships make a ton of money off service. So why would you want to sell an EV? Why not just sell an internal combustion engine? So you're kind of pushing back against the trend. So there's a lot of problems there that Tesla's competitors are going to have to face. It Tesla just doesn't. If Tesla wants to drop price, it's tomorrow. You got it now. You can get that car for whatever price. When you have to go through a dealership model, it doesn't always work like that. And then all of a sudden they're saying, oh no, now you got this dealership markup on this truck and you got this and that. And all of a sudden you're like, wait a minute, I thought Ford said da-da-da. It's almost like a trick. So anyways, guys, appreciate you joining me as always. Much love. Thanks for being subscribed. New all-time high subscribers in the history of the channel. If you're looking to apply to join my private group and be part of that, we got a lot of high-level Tesla investors in there. A lot of folks that have just as many shares as me, if not a lot more shares. And we're always obviously talking Tesla stock each and every day. So if you want to apply to join us in there, see if you're a good fit, check out the description area. I might also have it as the pinned comment down there along with my Patreon. If you enjoy the channel and you want to support the channel, support me on Patreon. It's like $19 to be part of that. And you also get to see all the moves I make in the Patreon portfolio each week. Much love and have a great day. Go Tesla!